Okay, I'm going to send a post email, and it will include a video of this workshop, another video on the PPP application form in general. It's really great. It's a really, really informative video that Jason shared with us. And then I'll send a link to the application as well, and this document. So you guys will get all the information that you need moving forward at the end of this workshop later on today.
Okay, thank you, Amira. So this is the actual application form, and this is the application form to forgive the money you've received through the PPP. And this is where that 75% comes in. So as you can see, the first part of this is pretty easy. It asks for all of this, just a few things. You'll see it says the SBA PPP loan number, and that's the one that you received when you put the application. Now, if you went through a lender, then that would be the lender's number on the right. And then the disbursement date is the date that you've actually received the money, all right? The employees at the time of the loan application. So if you only had 2 employees instead of a full amount of employees, that's the number that you're looking for in that line. And then the next line is, how many employees do you have now filling this application out? Then if you did receive an EIDL, how much that was and what that number was. And this payroll schedule is important. Do you pay, how often do you pay? Because that's going to go into the worksheet. So the covered period is, it's a 12-week period. And Jason, can you go up to where it talks about the covered period? Because you do have 2 different choices here. You can, it includes both. Mandy's asked a question, does the EIDL include what you received or just the portion? It includes all of it. Okay, so what we're looking at is line
Lou, we lost you. I don't know what happened. Your voice went away.
Okay, is this better?
Yep, better.
Okay, so the covered period is 56 days, and that can either start when you receive the money, or it can start the first paycheck date after you receive that money. So this gives you, these are the instructions, and it explains pretty well what we're looking for there. Now, did anyone receive loans in excess of 2 million? Because I'm not even going to go there. I don't think we have any help on that. Okay, so now we're going to go down back to the application. I'm sorry, I should have done this myself. Jason, if we get, okay. So now this covered period should be 56 days. And either you use the covered period or you will use the alternative payroll covered period. That's the one where it's still 56 days, but it's not used until you have your first pay period after you receive the money. All right. Now, here comes the hard part, the forgiveness amount calculation. And this is, now this is where we use the worksheet. I'm sorry I'm going back and forth, but this is the type of application where you actually need to go back and forth. So we're going to go down here, keep to this worksheet. And this is the most important part. This is the part that you don't have to hand in, but it really helps to have worked this. So this is the employee's name. Now, some of the lenders, some of the banks, or some of the other lenders may ask to see this sheet. So be sure and fill it out because they're going to ask for some kind of verification. And this is one of the things. So this worksheet gives you a way to figure it out. So the employee's name, the employee identifier is the last 4 digits of the employee's social security number. Their cash compensation is their gross amount of payroll. Now, this is where we get into the average full-time employee. They are using 40 hours as their average. So if you have someone who worked 32 hours, they would be either a 0.8, and how we get that is we take 40 divided by 32, and that gives us a 0.8. I will come back to the reduction in just a minute. Then what we do, so on the average, you could do it one of 2 ways. So you could either do it the percentage of time, as I said, 32 hours, or anyone that's not full-time can be a 0.5. So either way works. But if you have a lot of people who are 20 hours, the 0.5 works. But if most of your people are at 32 hours, then you want to use that percentage. Then, so that's the first part. Now, this next part is the salary or hourly wage reduction. This part's a little more confusing. Jason, are you up on that part? Can I turn that over to you and then come back?
Certainly, we can definitely do that. A couple things to point out. First of all, this is, we were discussing before the call had officially began, that in my organization, a number of people have seen a video that explained most of how this works in about 45 minutes, and it was so dense and so thick that all of us that have graduate degrees in business and finance couldn't make it all the way through on the first go round. My advice to anybody listening to this is that you work with your accountant or bookkeeper, because if you're very numbers oriented, you can figure this out. It'll probably take a few run-throughs of this, but you can figure it out. If you're not, rely on your payroll company because they'll do much of this for you. I can go through a couple aspects. You'd mentioned about the FTE reduction safe harbor, and apologies for the audience on this. We're still working through all these rules because they're so complicated. This spreadsheet will go through, in general, it'll go through the rules for how you can not have the PPP forgiveness amount reduced. And there's a couple ways to do that. I'll actually flip over to one thing that I did recently, which was, see, for the wage reductions, there's a video that Amira had mentioned she'll be sending out to everybody. And I watched the video and took very detailed notes throughout. So I actually have that right in front of me, which is what I am going off. For wage reductions, it's more complicated. It's supposed to be a way for you to identify for each employee were wages reduced to below 75% of their first quarter income. Step one in this process is for each employee that you have, if you did not reduce their salary by 25% or more, you can skip that employee and go on to the next employee. The safe harbor rules states that if you're paying an employee back to 75% of where they were in the first quarter of 2020, if you restore them their compensation to 75% or more of that amount by June 30th, you can skip that employee and you're fine. You meet the safe harbor. Next, you meet the safe harbor rule and there's no reduction in the PPP percentage that's reduced. Next step for figuring out to figure the salary paid out for during Q1, that's intended to be during the covered period. So you look at the salary that was paid during the covered period, divide that by 8, multiply that by 52 to get the annual rate. And if the pay is lower than 75% of the pay on February 15th, 2020, you subtract out the amount they were paid versus the 75% of the look-back period that is determined. And for look-back period, I haven't gone through that, and I'm not sure, Lou, if you'd be comfortable speaking about that. I can go further if you'd like.
The look-back period is the 56 days that you want to use as your option, all right? So if it's the 56 days at the beginning of the year, or if it's other 56 days, especially if you're a seasonal employee, that's what we're looking for there. Now, I'm going to go back to this average, the salary hourly wage reduction. So if we could scroll up a bit. Jason, can you go up just a bit on this to the table in front of it? It says salary hourly wage reduction. And there are three things that would qualify for that reduction. The first one is if an employee chooses not to come back to work for whatever reason, but they just say, I'm not coming back, all right? Then the second reason they would do this is they were terminated for cause. So you choose not to bring them back. The third reason is if they accepted to voluntarily voluntarily reduce their hours. So those are the three things that would go in the it's not easy to say, salary hourly wage reduction. All right. Now, the look back period, I'm going to go back to that, is from between February 15th, 2020 and April 26, 2020. That's what they're looking at as the look back period. Okay. Any questions so far on just this particular worksheet?
We just had the one question, but I answered it. And it's not really applies to this, but it was just that the deadline to apply to do this application is October 31st, 2020, correct?
That is correct. And
just
that
clarifying that.
Written on the top of the application worksheet.
Yeah, I saw that. And then we do have a question. Do you include quarterly tax deposits and 941s in payroll amount to be forgiven?
What you include is on the employee side is their gross, which would include that. On the employer side, it's the matching amount of the payroll. So your portion of the Social Security and Medicare. Okay. All right. Jason, can I have you go to page 9 on this, please? That's the problem when one person's running it and the other one's talking. Okay, so this worksheet on page 9, so this is box 3 where it says salary hourly wage reduction. Those were the 4 reasons that I gave you that would go in there. So it would either be employee doesn't want to come back, they're terminated for cause, they accepted the work reduction hours, or they voluntarily resigned. So those are the 4 that would go in box 3. And then the second section is for anyone who is, if you'll see table 2 here, it says that that's for anyone who made over $100,000 per pay period in 2019. So if there was anyone who made that much money, And I don't think most of this is going to apply to the people we're talking to. So most of you are going to be using table 1. All right. Now, yes, from Jeannie, all these notes are going to be sent out via. Amira's going to send them all out afterwards, okay? Now, the next thing that we go in is this safe harbor period, and that's where we use the number of full-time employees. This is what all of these loans are based on. 2 things. They're based on the salary, but they're also based on the full-time employees. That's FTE. And both of those are very important. So that's where we look at box 1, box 2, and box 3. Now from there, I hate doing this, but that's where we come back to page 3. And all of the numbers on the worksheet, page 9, get entered onto the application on page 3. So you'll see right here, it will ask you for line 1. This is page 3. There we go. So the work page I was looking at on page 9 is now getting filled out on page 3. What you don't have is if you paid any business mortgage payments. Now, what they're looking for there is not the full mortgage payment, but the interest that you paid on the mortgage. If you don't own, but you rent or you lease, that goes on line 3, and that is actually the full amount of your rent. Then line 4 is the utility payments. If you don't pay utilities or you work from home, there are no utility payments. Now, I believe, but this I'm not sure about, I believe that if you work from home and you do a percentage of your workspace, that would be the utility. So you'd pull up your utility statement and divide by the number of square feet to get that for home-based businesses. Okay, now we go to the next part of the application, which is the adjustment for full-time employees. Now that total salary, so you can see that comes from Schedule A, line 3, and then we add line 6 is the same number as that was on line 5. I'm sorry, let me repeat that. What goes on line 6 is here is the total of line 1, 2, 3, and 4 on your worksheet, and then subtract anything from box 5. I'm sorry. This gets a little confusing and I'm making it more confusing, so I'm sorry. So line 6 is the line 1, 2, 3, and 4 from worksheet on page 5 minus line 5 above, okay? All right, then we get to full-time reduction quotients. That's, look at line 13, which is on page, there it is, thank you. Line 13. Up, up, up. All right, so what I'm going to suggest, as you can see, we're moving all around. What I'm going to suggest is that you run the whole thing off, fill out the first part of the application, Then go to the worksheet, fill that section out, and then come back to the application, because all the numbers from the worksheet are what get put on the application. Now we're going to get into line 10, which is the very complicated part, which is the 75% of this money that had to be used for those. And this is where I'm going to turn it over to Jason to talk about the 75% and how they came up with that and how you figure that. All right, Jason, can I turn that over to you now?
Certainly. For the 75%, so the 75%, and for much of this discussion, and we're as you can tell, we're all getting our feet under this for how it works because it's extremely complicated. So one of the rules is on payroll that for the total amount to be forgiven, the most that can be forgiven is, or 75% of the total dollars to be forgiven must be payroll rules, must be payroll dollars. And for payroll dollars, that includes dollars that you pay your employees. It includes owner's draw. And owner's draw, when for companies that file Schedule C, is 8/52 of your 2019 net income, which is line 31 on Schedule C. So that is allowed to be included in payroll. There's a technical definition of payroll, and will be one of the documents that I'll ask Amir to please send out is Colorado Enterprise Fund, who is my employer, has developed a number of questions and answers. We'll be releasing these weekly, digging into the technical rules, because most people can only absorb about 15 or 20 minutes worth of this information because it's so dense. But getting back to the 75% rule, the way to determine that, my rule of thumb is look at your total PPP loan. Say that's $10,000. Of that $10,000, for the full amount to be forgiven, 75% or $7,500 must be used on payroll costs, which are the elements that I had mentioned before. Mathematically, if you're spending if you're spending fewer dollars, say of that $10,000 loan, if you only spent $6,000 on employee payroll costs, then the most that can be forgiven is 6,000 times 1.333. Kind of strange math, that's the way it works. So in that case, for $6,000, you could only have forgiven at maximum 6,000 times, just doing the math in Excel because I tend to do that more accurately when I am presenting. The most that could be forgiven in that instance, $10,000 PPP loan, only $6,000 was spent on payroll. The most that can be forgiven is $7,998. And the way to check that math is 6,000 total spent on payroll divided by 79.98 that I just mentioned is 75%. And Lou, if you'd like to take it back, or I could continue to discuss if you would prefer.
Jason, she may have stepped away, so go ahead.
Okay, going ahead. So a couple other elements to discuss are how to calculate FTE. This is a massively complicated process. And one way that you can document your FTE during the look back period. So we're looking at two different things. One is your full-time equivalents, or FTE. The other one is the number of dollars that you pay your workers. Two different things, both are important. Getting to look back period, again, just general concepts. The rules have changed for this as of last Friday when this application became available. The current rules are for all businesses, there are 3 look back periods you can use. Either February 15th, 2019 through June 30, 2019, or January 1st, 2020 to February 29th, 2020. Or if you're a seasonal type employer, and I've run across a couple of these, very, very few though. But if you qualified for the PPP loan based on your being a seasonal employer, then you can pick any 12-week period between May 15th and I believe the end date is September 1st, but that I need to double check. There's a third look back period that's cited in regulation. So that is the look back period. And another element that Lou had mentioned that I'll reiterate because it's so important is what is the covered period? And the covered period is the 8-week period during which you can have dollars forgiven if you use them in the right way. That period begins either with the first day you received funds from the PPP loan, or if you pay your workers biweekly or more frequently. then you can use the alternative period, which is the period starting with the beginning of the new pay period immediately after funds have dispersed. So there is that other requirement. I've seen it skipped over in a couple presentations, but that alternate pay period is only if you pay your employees on a biweekly or more frequent basis. And so those are a couple of the areas. Let me think. And Lou, feel free, please step in if there are some other areas. What I'm doing now is skimming back to a video that was put together, and it was excellent video, very, very dense, but it was done very, very well. Let's see, for PPP dollars, there are only a few areas where you can spend dollars from the PPP loan. Actually, I'll just skip over to this. I'm going to do another share right now, which is going to be to the notes that I have taken of the video that is absolutely top notch, that was put together by Gusto. So there are only certain expenses that you can include, certain ways that you can use PPP dollars: payroll, utilities, mortgage, interest payments. And that's for the forgiveness amount. You can, my read on the PPP, on the CARES Act and the PPP loan uses is that you're able to use the PPP proceeds to pay for mortgage payments, but the part that can be forgiven is only interest, not the principal payment of the mortgage payment. You can use PPP dollars for rent, lease payments, FTE reduction rules, and something else to mention. And this came out, I'll just open up the chat. I apologize, I've been missing the chat feature. I was having some difficulty pulling that up because I'm presenting. So Amira, please step in also if I'm missing anything on the chat side, or if there are requests to cover different areas. But something else to mention,
and I will repeat this, is the safe harbor look back periods. And the February, there's 3. The first one is February 15, 2020 to April 26, 2020. The second period is it's not. The bar restored its full-time employees level no later than June 30th. And I have lost the information on what the third one is, so I'm going to have Jason tell you that one.
certainly.
But one of the things that I do want to add is when you're going to the owner's compensation, you can't use any amount over $15,385 is the maximum amount that you can use for an employee, an owner employee, for any individual amount that you're talking about. And that's for general partners or owner employees. All right, here's an interesting question. Someone said if they are a employee and they're the only employee, they're pretty well self-employed, or they're an LLC, or even if they're an S Corp, can they use the full amount of the PPP to pay themselves? Now I'm going to hit one part and then I'm going to ask Jason to do the other. For any payroll period, I'm going to actually read it. The total amount paid to the owner or self-employed individual. This amount may not be included in PPP Schedule A worksheet. If there is more than one person, it has to go into line 5 on, yes. Okay, so Jason, am I correct that they can only use the 15,000, or is that 15,000 per pay period?
I can step in here. The Treasury has provided specific guidance. It states that if you are an owner employee, that you may not, if you file Schedule C, which is the majority of owner employees that we work with, you may only pay yourself up to 850 seconds of your 2019, of the amount on 2019 Schedule C line 31, which is business net income. The Treasury has stated it would be a windfall for business owners if they counted more than that amount. And Lou, you're exactly correct about the 15,385. That's my read as well. The limitation on that, the reason for that number is the CARES Act says that business owners can only pay themselves or their employees up to $100,000 cash compensation per year. Benefits are not included in that amount, but $100,000 is the most that they can pay themselves. $100,000 brought down to an 8-week period mathematically becomes 15,385. That's the reason for that number.
And is that per pay period, or is that total?
15,385 is total. That's the total over the 8-week covered period that during which dollars can be converted from a loan to a grant under the CARES Act, and that's the intent of what everybody's trying to do. So for all intents and purposes, 15,385 is the most, the number that normally would be used, because most business owners are paying themselves nowhere near $100,000 per year, at least the ones I'm working with. So the true number would be total on Schedule C, line 31, which was the basis of your PPP loan. That number divided by 52 times 8, that's the amount that you can pay yourself, or the maximum amount. That's if you had no employees. If you had employees, then the math would be a bit more complicated, and I'll pull that question offline.
So there's a question here that says, for sole proprietor, as an only employee, we can use the entire PP loan for salary payment to ourselves, correct? No, that is not correct. You can only use $15,385.
And just to expand on that, that's up to $15,385, but the Treasury guidance is 850 seconds of the amount on Schedule C line 31, which is your net business profit or loss.
And can we use owner's draw as a way to document that salary? The best way to do that would be actually to write yourself a check and have that check. But if you did a transfer, I would show the transfer amount as what we're looking for. All right, so Sheila says, do you deduct the idle advance prior to the 75% calculation? I'm not sure. Jason, do you know the answer to that?
Sure. For that, for the idle loan proceeds, I've not seen it on the PPP application mathematically, but what the guidance stated is look at the total amount. After you calculated the total amount that can be forgiven on the PPP application, then subtract off the idle advance. And the rationale on that is because you've already been given those dollars. Not sure I follow the rationale, but that's the wording in the most recent Treasury guidance.
Now, here's a question that I even had, and that is, if you are an employee, so you're an S Corp and you're an employee, do you put that information under employee, or do you put it under employer, the amount paid?
For an S Corp, one thing to keep in mind is the PPP was based for S Corps only on $941, line 5C, left column. So it's not based on K1 owner's draw. So the PPP loan amount is only based on W-2 earnings. And as I've seen tax returns both ways, I'm definitely not a tax expert, but I've read dozens and dozens of tax returns in the last few months. And for some of them, some S Corp owners pay themselves W-2 and classify those dollars as officers pay. And others that I've seen on tax returns, and I cannot vouch for if this is correct or not, some count those dollars only as owner's draw, and they do not count them as W-2 taxable income. So my guidance would be, please look at the 2019 941s and look at the total of those numbers. And that's what you can pay yourself as the owner, not the K-1 owner's draw out of PPP loan proceeds, that for it to be forgiven, that is.
All right, here's another question we have. Are you allowed to use more than 75% on payroll? And I believe the answer is yes. Is that correct, Jason?
This is confusing and complicated because the Treasury is given two different guidelines. One is for employees. You must use, for the amount to be forgiven, 75% or more must be for employees. That's one document. So if I'm the owner and I have 5 employees, I pay them 85% of the total PPP loan amount. That's fine, according to that piece of guidance. The conflicting guidance is that as the owner, you can only pay yourself a maximum of 8/52 of last year's net income. Typically it's line 31. It's a little different if you have employees because you would include the 941 line 5C in the left column. You'd include that amount as well. So there's an upper bound, which works out to be about 74.8% if you're the only employee and you're the owner, or you're just paying yourself through 941 W-2 wages. So that's the upper limit. So in both cases, it's right around 75%. If it's you paying employees, then you can pay more. If it's you paying yourself, you cannot.
Okay, I believe that's all our questions. What are the first 2 look back periods again? Can you go over those, please, Jason?
Certainly. Look back periods are, and these are the look back periods for FTE. So actually, I'll share this. What I'm doing right now is, and I will share this in a moment. I'm sharing the Word document that was my summary of the presentation that was incredible, that I recommend everybody take a look at this. So what I'm sharing now is the look back periods. What was updated for this application that was a bit different from previous Treasury guidance, but similar to what was written in the CARES Act, is you can choose one of the following. Typically it's 2, February 15th, 2019 through June 30th, 2019, or you may use instead January 1st, 2020 through February 29th, 2020. And for seasonal employers, any 12-week period between May 1st and September 15th of 2019. And one thing to share for anybody who's not applied for a PPP loan, the way that I'm reading this, and I'm one of the reviewers for Colorado Enterprise Fund who asks for additional information, says, no, you're not eligible, or yes, you are eligible. And in that case, I forward on the application. I've seen a couple business owners that were not in business in 2019 at all. There's not exact guidance on what information should be used if they were not in business, because typically, if you are in business in 2019, you must use your 2019 tax form. If you haven't filled it out, Schedule C, then the guidance is please fill it out and the lender must use that. If you are not in business in 2019, what I am doing, and I'm encouraging my coworkers to do the same because this follows all Treasury guidance, is look at January and February net income and annualize that number. Typically all we have is numbers from a payroll system, profit and loss statement from QuickBooks or whatnot, but that's the number that I'm looking at, and I've approved for processing 2 loans so far using that information.
Okay, so Sheila has asked that we please go over the gross pay that is used in the calculations. So if you have a payroll company, you want to look at your 941s. That's gross pay is what's on your 941s. And if you didn't do your 941s or you're going into the second quarter, you still want to look at the total gross that is paid to all employees.
And what I'm sharing right now is a document that it's internal to Colorado Enterprise Fund, but we're looking at developing something similar to this and sending it out to all business owners. This is complicated, so there's fine print. The payroll, technically it consists of all the things that you can see on the screen. For calculation purposes, one element that was somewhat strange, but this is part of the guidance, is that for payroll purposes, you cannot include the employer paid FICA. The employee paid FICA, yes, that is includable, but not the employer paid. I believe I've got that. PPP, yes, if you look under number two, I drafted up number two. I pulled it directly from the guidance from the Treasury. So these are things that cannot be paid. PPP proceeds may not be spent on any individuals who live outside the US, compensation of an individual employee in excess of annual salary of $100,000, federal employment taxes imposed or withheld between February 15th and June 30th, including the employee and employer's share of FICA. So that's, I'm not saying it makes sense, but that's part of the guidance. And qualified, I won't get into D because that's going to be, it's quite complicated and it's not something that will impact, I believe, anybody on this call or most business owners at all.
All right, another question we have from Lisa is for S Corps, SEP, what about S Corp, SEP retirement contributions?
That's a good question. Retirement contributions fall into the category of allowable expenses. They qualify as part of payroll cost. And I will, let's see, so payroll, and this I'll read because it's a bit of fine print, and it answers the question just posed. Payroll costs consist of compensation to employees in the form of salary, wages, commissions, ... cash tips or equivalent, payment for vacation, parental, medical leave, allowance for separation, and payments for employee benefits. And this is the part that's relevant. That covers group healthcare coverage, including insurance premiums and retirement, payment of state and local taxes. So the retirement was the question just asked. And my interpretation of this is, yes, it may be included as long as it's paid through the corporation. It gets into the gray area if you're paying for your own retirement benefits and you do not go through the company. That's, I'd be somewhat comfortable with. It depends on who you speak with, because that's not, to me, that's not clear. Best way to do this, rule of thumb, is pay those dollars through as an employee benefit through the company bank register. And in general, as a lender, as somebody who's going to be reviewing these the documents, the main thing that we're looking at, we at Colorado Enterprise Fund is planning on looking at is bank statements. We're looking at your attestation as a business owner that this is correct, and you have the bank statements that confirm the dollars that were paid out. Much of this is dependent on the business owner, and you are attesting that all of the elements in your worksheet are correct. And I'll skip back. One thing that I believe Lou had mentioned, and I found important as well, I'm just doing a new share on the summary of my summary document that I took of that video, because there are several documents that are required. If you look at the top couple lines, your lender, you must turn in your calculation sheet and your Schedule A, but not the worksheets. That's yours. I believe it's 6 years that the SBA can look back at. They can request this information. I'm positive they will be auditing some percentage of all borrowers. Everyone over 2 million is audited, but all borrowers are subject to some type of audit. That's, the SBA hasn't explained exactly what they'll be looking at, but I would only include items in the worksheets that I had proof of if I were filling this out myself.
All right, now I have a question here from Mark concerning unemployment and PPP. I'm assuming that you cannot collect both PPP and unemployment at the same time. Well, I would have to agree with that. That's a good assumption. So does that mean for the 8-week PPP period, no unemployment, or is it just the weeks during the PPP period that you pay yourself that you can claim unemployment?
Lou, would you like that one, or shall I?
Please.
There's not guidance on this exact rule yet. The overreaching guidance that is in place, and I've had this question a number of times recently, is if I received a grant from Douglas County, from Jefferson County, whatnot, and I received the IDA loan or economic injury disaster loan, and I received the PPP, and I'm thinking about unemployment, what all can I keep? The guidance from the federal government for all grants and loans is that you cannot be reimbursed for the same expense twice. The dollars for pandemic unemployment assistance, or the other version that would kick in if you earn more than $2,500 in wage income in 2019, that pays the extra $600 a week. And that one I discussed in a previous call. We could go over it offline if anybody's interested in that, because that's a great benefit for anybody who applies. But the overarching guidance is you cannot pay yourself twice. So if you're paid unemployment insurance for 4 weeks of the 8-week period, then for that period, you cannot also you cannot pay yourself through your company through PPP proceeds. My comfort level, if I was doing it, would be to apply for pandemic unemployment insurance if I had no W-2 income in 2019, keep that in force up until when you have the PPP loan proceeds, and then look at the dollar difference. How much would you get per week under PPP based on the look back period of 2019 net income versus how much would you get in unemployment? And the final thing to mention that is not exactly spelled out in guidance, so we're trying to piece through this, is one business owner I'm working with has a number of employees. So he wants to use PPP funds for paying his employees. However, if he paid himself, as he did in 2019, he'd be paying himself about $300 a week versus under pandemic unemployment assistance. He is eligible, the minimum that he'd be eligible for the period from end of March through end of July would be $823, which is $223, which is the minimum base plus the extra $600 per week. So the question was, what should he do? And my guidance to him, based on everything released so far, is use PPP proceeds to pay your employees, to pay your rent. Do not use it at all to pay yourself, and continue to collect unemployment assistance, because that's a larger dollar amount for him to collect. Haven't seen anywhere that is or is not allowed, but that's my guidance to him. Even if you don't use the full PPP loan, stick to that. Only pay your employees, don't pay yourself anything at all. Keep documentation of that.
All right, one more question, and that is, if the owner is an S Corp and they're paid as a W-2 employee, and are their health, retirement, and state and local taxes allowed or still excluded as the owner?
I would read them as yes, being allowed.
Okay, thank you, Jason. And then a question from Lisa, why would idle be subtracted? Because it doesn't pay for payroll, it pays other expenses.
And for that, I can tell you what the Treasury says. I cannot explain why they did it, but what the Treasury says is you must subtract out any idle advance because you have already been paid that dollar amount. So therefore, it's not eligible for forgiveness because it's already been paid to you. That's a summary of what the Treasury actually said, and I cannot explain why they made that determination, but that is what they have determined.
All right, I think we've covered quite a bit. One of the things that I will say is the video helps tremendously. Don't feel like you have to listen to all of it at one point. Take the piece, go ahead and fill out the application, then go back and listen to the next piece. I think it will help instead of trying to do it all.
And I'll be sharing, and this is Amira's call with regard to sending this out, but I will be sharing my the Word document that I took, which was my shorthand of the video. And it's hopefully a little bit more comprehensible. I added a few more notes based on things that I know that weren't discussed at length. So my intent was just to provide the information provided by the video, just in a visual format versus a video format.
All right. Yes, and this looks like a lot of my notes as well, so I will let Jason do his. All right, other questions? Lisa, the link will be sent out after this along with the amount, I'm sorry, this video, where to find the video, and a copy of the, we've recorded this session that will also be sent out, and that will be sent out afterwards.
Right, so this is Amira. I'm going to send out a copy of this recorded workshop, a copy of the video that was referenced in this, and that video was produced by Gusto and a few other organizations. The 12-page document on the PPP loan application forgiveness, and What else? And then some info that Jason's going to send. What were you sending, Jason?
And I was thinking also, I'll see if they're posted yet, but Colorado Enterprise Fund is posting frequently asked questions, and just drafted up the first 13 or 14 that are going to be made available. They get into a lot more detail, and I'd advise everyone on the call, take this in bite-sized chunks. How do you eat an elephant? One bite at a time. It's real similar in that I don't feel that anybody out there will be able to comprehend this entire concept at one sitting. It's more of a element where you need to take a look at it a little bit, set it aside for a day or two, and then try it again. Otherwise, it will be completely overwhelming. So yes, I'll send out my summary of the video for those who might not make it through the full video or just would like it in a different format.
Okay, that's great.
Also, I am available to help people fill it out. I don't have all the answers, but I can usually find them if I don't have them. So if you want some help with this, go ahead and make an appointment with me via Amira.
Yeah, and I'll send that info out as well. Okay.
I'm pretty available. I'm just jotting down my email address. I'm available by email as well. If anybody has questions, I try to stay off the phone because I can type faster than I can convey information, and I can send more resources to you if you send me an email than can share in a video or audio conversation.
Yep, so I'll definitely include Jason's contact info as well. So you're going to get a lot of information coming to you this afternoon. So stay tuned. With that, I think I'll just get into announcements. So moving forward, we have been doing the COVID-19 All Things Funding. We've been doing that for 2 months, every Monday morning from 10 to 11. We are still continuing that program. That will resume this next Monday is Memorial Day, so we're going to take Monday off. But on June 1st, we'll continue. It'll still be Lou and Jason, but it'll just be COVID, all things COVID. So now we're going to kind of bridge out. We'll still be talking about funding and funding options and new options. I know the county is getting ready to release an application for if you are a business in unincorporated Jefferson County, so any of the mountain communities, South Jeffco, those areas that are not connected to a city or a municipality that has offered funding, then you will be eligible to apply for the funding coming from the county, and they released $5 million for that, and I think they're grants, and they are up to $5,000. So I'm going to have more information on that next week, and I'll be sending out the application for that as well in my newsletter. So if you don't get our newsletter, you can sign up today via the email that I send out this afternoon. So I know we'll be staying abreast of all the new funding options, and then continuing to answer questions on this like what we did today. Everything funding still, but we're going to also move into getting back to work, relaunching your businesses. Marketing, what's the new normal look like, right? How are you going to reach your target audience? How are you going to be doing business? What do you need to learn new or pivot or change about the way you do business, right? So we're going to really kind of broaden this, but it's still going to be really centered around the current business climate and what's happening with COVID. And then in addition, we're still continuing all the business education classes. For now, we're going to keep them all on Zoom just because there's actually a lot of unintended consequences that we've discovered from doing them on Zoom. So it's easier. People don't have to travel. Our attendance has been much better. Now, granted, people are at home, so I realize that. But I think we've seen a big influx in numbers from like mountain community businesses in the mountain communities and further out, so they're not having to drive to Lakewood, right, almost to Golden to come to class, and we can actually serve more people this way. So we're going to continue on Zoom for a bit. So on, what do we have? Next Friday, May 29th, we are doing a workshop called What's My Business Worth? COVID-19 Business Valuation Workshop. That's through Front Range Business. Those are the folks that always do such an amazing job teaching our buying and selling a business workshop. So they put this together and offered it to us. And I said, yep, let's do it. Because I think a lot of people are just even considering that. So that is next Friday. Lou is teaching Bookkeeping 101 on Monday, June 1st. That's in the afternoon. So we'll be doing all things COVID in the morning and Bookkeeping 101 in the afternoon. Our launch program is scheduled to go on Friday, June 12th, and it will run through August 14th. It is every Friday morning from 8 to noon. We are going virtual, and I think we have Annie Hammond on the line. Annie, are you still there with Sunflower Bank? They're our sponsor, And she's amazing. She's been with us since the very beginning, since we launched this program. Annie and I connected right at the beginning when this was still just in the creation stage. So that's been awesome. She's been with us. So Annie, if you're on, you can say hi if you want.
Hi, everybody. This has
great.
been a challenge with the PPP stuff. So this presentation has been absolutely phenomenal. It's so difficult to understand. So thank you so much. And I just so do appreciate it.
Oh, absolutely. Absolutely. And Diane Rowland is on as well. She teaches our business taxes and partners with Lou on the bookkeeping portion module of the launch program. So launch was originally designed as a startup program for new businesses and entrepreneurs just starting out. But quickly we realized that this is an excellent program for growth and expansion, or if you're changing direction in your business. So really consider that. Feel free to reach out to me. We can talk more about it. You can make an appointment with Lou to talk about it. This might be an excellent time, especially if you are thinking that you really need to pivot and make some changes in how you do business, how you connect with folks, right? This might be a great opportunity to take that program. So that starts Friday, June 12th and runs for 9 weeks, every Friday from 8 to 12. And then I'm super excited about this. A couple weeks ago, we offered an e-learning made easy workshop, and it was a huge success. And so since then, we've now partnered with that same gal, and she's going to teach a 4-part series, and it really is taking your business online. So this is especially good if you're a consultant, right? Because you're going to learn all that you need to know about writing content, using simulation, using videos. The program will be focused on is something called Captivate. We're going to learn how to use that. It's a 4-part series, so 8 hours total, and she's just given it her all. This is normally what Cassie gets paid to do, and she was just inspired just to share it. So super, super excited about that. That starts on Monday the 15th and will run the 4 consecutive Mondays from 3 to 5 in the afternoon. And then we have government contracting. That's on June 17th. Government contracting is a stable source of income. So if it's something that you haven't considered before, tune into that, because many businesses are eligible. You may just not know it. A lot of businesses, the government is a business like anything else. So they need vendors. They need people to do various duties and provide various services and products. And they are required to offer a certain number of contracts to the small business community in their local areas, wherever those offices are. So we have several offices, I know, here in Lakewood, and I think they're all over Jeffco. So it's city, state, and county, right? So you can get contracts with all of those. So tune into that, and we're partnering with the Colorado Procurement and Technical Assistance, so Colorado PTech. They essentially do what we do at Jeffco BRC, but they do it to help you acquire government contracts, because much like this PPP application, that's a lengthy process. Boy, it takes a little bit of patience and then a lot of research. So Lorna is her name. She shares the office with us in Lakewood, and she's teaching that class. So I'm going to stop there, but we have a lot more classes coming up. I will include a link so you can check out all the classes. I'll also include a link so you can register with us to receive the newsletters, and I send them out about 2 or 3 times a month, keep you up to date. Also, feel free to check out our Facebook page. We've got a lot of information there as well. And with that, I just want to thank both Jason and Lou. You guys are always so amazing and just share so much information. Really appreciate the two of you. And Jason, do you have anything else you would like to say before we close out?
I appreciate being invited to the forum. It's a great setting, and it's edifying to be able to share information with a broader audience. I'd encourage everyone to take a look at Colorado Enterprise Fund's website for our frequently asked questions that'll be posted, for resources that we're developing, because my colleagues are working some really, really long hours to try to get information out as quickly as possible. We're a not-for-profit founded in 1976, so our intent is not to make money, it's to share information. www.coloradoenterprisefund.org, and that's enterprises with an S.
Yeah, and I will include all of Jason's contact info too. And Jason, you guys are still doing, you offer funding. Do we just talk just a few minutes? Just give us, a minute on what are the products that you offer? What do you do?
Certainly. What we normally do is we lend to businesses that banks won't touch. Most of our business over the last 40 plus years has come from loan officers that have turned down business owners because business owners not been in business for 2 or more years, has not been profitable in one of the most recent years. So that's our normal bread and butter. What that changed to 100%, and I think we've actually, thanks to our leadership, we've done quite well in moving over to this new area is now 100% of our effort is only on processing Paycheck Protection Program loans. We offer them, we can process them up to $250,000. We do have some smaller loan funds that are available on a county by county basis, but our main thrust right now is only focusing on the Paycheck Protection Program. I'm on the team that reviews the applications after they come in. I'll be on the team that approves the dollars being converted to grants instead of loans. So that's where much of my expertise is coming from. It's from reviewing all these applications and answering questions that I've never heard before and that I can then research and provide answers to.
Awesome, fantastic, that's great. And I know Annie Hammond with Sunflower Bank, that she actually was the person that introduced me to Colorado Enterprise Fund years ago, because she partners with them quite a bit, being a personal business banker herself. So thank you, Annie, because it's been a great connection with Colorado Enterprise Fund, and much appreciated. And Lou, do you have any last comments you want to share?
No, I really have been studying this application for the last week. So if you do have a specific question, you can either, if you have more than one question, go ahead and set an appointment. If not, go ahead and you can send me an email and I'll see how I can help you. And Amira will send out my email address as well.
Yes, I will. I'll send everybody's. Okay, well, if that's it, I'm going to go ahead and open it up. If you guys have any last minute questions, comments, I know we're running over a few minutes, but audience participation is important. So any last minute comments or questions? Otherwise, we'll close it down, and then you can expect an email from me this afternoon. Okay, hearing none. All right. Well, have an amazing weekend. I know it's a long weekend, so hopefully you get out, enjoy the weather, and stay safe. We'll see you soon. Bye.
Thank you.